Hello and welcome to Net Profit Home. If you're looking for answers about protection LLCs and corporations offer, then you're in the right place. This may be the most important foundational video you ever watch. If you have an LLC or want to start an LLC, you will not want to miss the biggest mistakes many people make when forming and operating their company. I will reveal some of the ways it is possible for you to lose everything, simply by not knowing that corporations and LLCs do not automatically protect you personally. Many believe once you receive the paperwork back from the state, you're all set, that you have total protection against lawsuits. There is no way you can lose your home, your savings, and your future income. Well, I have bad news. That's not even close to the truth. Without the right knowledge, your company will be pierced and your personal assets will be up for grabs. You won't want to miss a single word of this foundational video. You know how at the start of some advice, you usually hear some kind of disclaimer? Well, I would like to let you know this is personal knowledge that I am about to share with you. This is not legal advice, and I am not an attorney or an accountant. You should know that as a business owner, hiring the right professionals and developing a long-term relationship is very important to your business. If you need legal or financial help, you should contact a professional. Now, consider this video as a warning to all single-member LLCs and multi-member LLCs that are ran incorrectly. The disadvantage of a single-member LLC is the risk that single-member LLCs will rarely protect against personal liability in the event of an audit or lawsuit or other claim. Here's a quick list of some of the disadvantages of single-member LLCs. Limited protection against creditors. Easy to get, easy to operate. Unfavorable court rulings, disregarded entity tax status, higher audit risk, no requirement to file annual reports or keep annual minutes, lack of outside liability protection, making it easy for courts in almost all states to pierce the veil. Like most things in life, when done correctly, will rarely ever come back to bite you. So if you decide to form an LLC, you need to know what to do after you get your LLC, how you should document company records, making sure you follow the LLC operating agreement, or make changes to the agreement to suit any changes in the operation of the LLC. In my opinion, the single greatest disadvantage of a single-member LLC is risk. You take the risk that you will not be protected against personal liability from a lawsuit or an audit. It is possible that your home, savings, all of your personal possessions, including your cars, investments, etc., could be taken in a lawsuit against your company. When you treat your LLC as a sole proprietor or as a single-owner business, you risk losing everything. Now, what do I mean by sole proprietor or single-owner business? You use the business checking to pay personal bills. You withdraw money as if it were your piggy bank. Sometimes you deposit funds to your personal account. You transfer money to your personal account or vice versa. You don't keep company minutes. And you don't even bother with an operating agreement. If you do have an agreement, you simply don't follow it or bother to amend it. Now, how does this compare to a corporation? Well, it's about the same. If you treat the corporation as, I am the owner, you'll be treated as a sole proprietor. Then in the event of a lawsuit, the courts will do the same. Now, make sure you get my checklist of the things that must be done to keep your business and you separate from each other. The link is in the description below. As a single-member LLC, you are at greater audit risk. Popular consensus amongst tax accountants is that a single-member LLC has a greater risk of being audited by the IRS. Since sole-member LLCs file a Schedule C with tax return, the IRS is notified that this single member is a sole proprietor. On the other hand, filing separate entity tax returns reduces your risk of an audit. This puts the sole member at a disadvantage by filing one combined tax return. Another serious disadvantage is limited protection against creditors. Single-member LLCs can face loss of assets if audited and a claim is issued. An LLC member's creditor is only allowed to seek payment against that member's distributional interest in the company. This creditor cannot directly go after the company's assets because of a claim against a single member of a multi-member LLC. As we see throughout this report, in the event of a single-member LLC audit, if it is difficult for your hired professionals to show the court there is a difference between the company's assets and the sole member's assets, this calls into question as to whether a single-member limited liability company will be effective for protection against a creditor of the sole member. And yes, the courts have found if an audit produces evidence of falsified records or lying on tax documents, the court has declared that the member and his company are one and the same and are both liable. There's some good news, though. 3 states, Delaware, Wyoming, and Nevada, give the single-member LLC the same protection as a multi-member LLC. There are a few things you may want to discuss with your accountant or attorney. One is to create at least a 2-member LLC with an operating agreement, annual company minutes, and no commingling of personal assets with business assets. And 2, create a parent company in one of the 3 states as the owner of the other LLCs. In the event of a lawsuit, the plaintiff will need to file and fight the parent company in that state before they can go after your other single-member LLCs owned by the parent. So why are single-member LLCs so popular? Simplicity. Human nature. We want to take the path of least resistance. There are very few legal requirements when running an LLC. The state does not require the filing of annual reports or annual minutes. You don't have to keep records of your meetings or any minutes at all. Don't fall for it. Since little is required, human nature dictates that little will be done. In fact, most people do almost no records keeping at all. Thousands don't even bother to have an operating agreement, which is the legal roadmap of the LLC and dictates how the company must operate. Summing it up is simple. You get sued, the plaintiff asks the judge to set aside the asset protection, claiming the company is a fraud. Since it has 0 records and no operating agreement, in most cases the court will rule in favor of the plaintiff. And now your personal assets are all up for grabs. If you're interested in becoming an entrepreneur or just want to make sure you are crossing your T's and dotting your I's, we'll be adding new videos almost daily. Please subscribe, come back often, and let us know in the comments what you thought. And may the business gods be with you.